December the 5th, Michael Vaughan with Brian Acker. The year is winding down. And Brian, are we facing a cliff? That's what everyone's worried about.
You know, fiscal cliff is the worst two words I think they could ever come up with on this particular situation. I think it's such a misnomer. But, yeah, day by day, we're all waiting for the white smoke to come out of the chimney here. And for investors, you know, from what I hear, you know, everyone's, you know, the market is grinding away. Everyone, you know, doesn't like it or whatever. But, you know, if they come up with a deal between now and New Year's, certainly on that fiscal cliff, and
debt ceiling.
Get that debt ceiling thing
combine them both
out of the way. If which I saw today that Obama's talking about linking together. I see this market rallying, you know, 8-9%.
So you're not going to take Christmas off?
I don't think anyone's going to be taking Christmas off. No. As I say, you know, people are going to be at the edge of their seats with their finger over the buy button. So so that's your, if you will, opportunity cost of missing out.
Right.
So,
now, but what's the downside? I mean, you say it's misnamed as a cliff because, in fact, it is a solution to their spending problems if they do fall into that cliff.
If they do nothing, let's say there's forecast $1 trillion deficit for 2013.
Right.
If they do nothing, $700 billion of that goes away.
Yeah.
So I call that a solution.
I do
don't
too.
call it a cliff. Yep. But what people are really, really worried about is another recession.
Right.
And maybe this tips the U.S. over in another recession. But I think, and this is where the compromise comes in, is maybe they can do it in such a way to mitigate any sort of slowdown / recession. So
you really don't see much downside then, regardless of...
Well, not only that, but you got the Fed just, I mean, they seem to be aching to do more monetary stimulus. So, I mean, that's the thing with this market. I mean, where's the downside? Yeah, you know, the market's not, you know, it's kind of grinding away here. But boy, I mean, you've got every both the you know, the government, fiscally and monetarily, kind of on your side. And what we want to bring to the party is the people on the other side, the corporations and the individuals who are flush with cash.
Exactly.
And I think once they solve the government side, the federal government side, that releases, and everyone knows their tax rates, everyone knows what the deal is going forward, is hopefully all that cash gets released in the economy, which is a key part of the recovery. So, and economists, you know, they just don't know what will happen. So, but we've seen this before. We've seen this in Canada many times, where basically the businesses and individuals, once they see there's an end in sight to the deficits and the debt accumulated by the federal government, they come in on the other side. And it's a leap of faith, but you know, we'll see what happens.
Looking at the Canadian fund and the American fund, I mean, the results are terrific on the American side. What's the story here in Canada? Is our commodity bull market running out of steam?
Kind of. We really keep an eye on China. There's about 10 things now, news reports coming out of China that have been quite negative. The latest has been Yum Brands, who you know, have been a great performer, great stock, but at the end they just reported in the last, I think it was Friday, that their growth in China is slowing down. Again, anecdotal evidence that things are slowing down there. If you look at Australia and Canada are always painted with the same brush. We're the commodity countries. I mean, they just lowered rates on Monday. Their prime rate went from 3.5% to 3%, which is the same as ours. So Australia is feeling that slow impact. So I think everyone's nervous. We haven't seen it in the Canadian dollar yet, but these things tend to happen all at once, people go, oh my God, China's in slow growth or a shallow recession. So, and again, Canada will be painted with the commodity brush. The hot money will flow. So that's what we're kind of worried about, and I think that shows up in the stocks.
So we need the American performance to pull us through.
Absolutely.
Yeah.
40% of GDP
That's
goes
it.
to America, whatever. But again, it's not negative, bad news for Canada. We're just taking a pause here. But again, something investors should have certainly looking at.
Well, it's quite a December shaping up. Keep your finger near the switch, Brian, and I'll be in to see you early in January. Thanks for your time.
Good to see you, Mike.